The Tesla share price has pretty much trebled in the last 3 months, but is it all a bubble, and just how much upside could be left? Hello, I'm David Jones. I've been a technical analyst in financial markets for almost 25 years, and this is our YouTube channel dedicated to US stocks. I thought we'd do an update on Tesla. It's only 4 weeks since we last looked at it, but the share price has doubled since then, since those latest earnings came out. We've seen it go rocketing higher, nearly touching $1,000 a share. So I thought, well, let's do an update. So in a second, we'll jump on the chart, catch up with what's been going on over the last few weeks. I'll come back, talk about it in a bit more detail. Then we'll drill down onto the chart and see, is there actually more upside still to come for Tesla, and what are the big levels to watch out for? As usual, if you're watching this and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out a couple of videos every week through 2020 on interesting US stocks. So let's take a look at this Tesla share price. This was the last earnings. You can see here in January. I think the last update we did was when they were trading around $500 a share. And the chart tells us, oh, we've seen the share price just surge since then. Not quite getting as high as $1,000 a share, but $9.69 a share, something of a sideways sort of movement going on since then. I'll talk a bit more about what's driving Tesla, the big levels to watch, and we'll come back and look at this in a lot more detail. So we last looked at these in the third week of January, ahead of the latest earnings. And as I said, we've seen the share price pretty much double since those earnings came out. The company beat expectations. The market was expecting earnings per share for Tesla of about $1.72 when they came out. Tesla had achieved $2.14. Revenues beat expectations as well. Broad expectations from analysts were for about $7 billion of revenue, and Tesla came in just shy of $7.4 billion. The company was pretty upbeat, understandably, and said that it comfortably expected to deliver something like 500,000 cars in 2020. So we've seen financial analysts in the city falling over themselves to raise their targets for Tesla, although there aren't that many that are really beyond $1,000 a share at the moment, which is pretty much just where it's trading at the moment. We've seen a short squeeze. Of course, last year, Tesla was one of the most shorted stocks in the US market. Investors, institutions betting that the share price was going to go down. As we've seen the share price rally, there's been a scrabble to cover those short positions, buying back in the shorts, and that, I think, has definitely helped push the price higher. But perhaps there are some stumbling blocks ahead. You know, in the last week, we've seen financial markets getting a bit more concerned about the impacts the coronavirus is going to have on the wider world economy, as that really shows no sign of abating at the moment. And of course, for Tesla, you know, we have a couple of problems here. You know, first of all, they have this new factory that's come online in China. You know, I don't know what sort of impact the virus could have on the manufacturing output of that factory, and also, you know, from a broader point of view, if you look at new car sales in China, they're down more than 90% in the first 2 weeks of February. So again, you know, China is a market that Tesla operates in. Perhaps we'll see something of a hit for sales there and affecting the next quarter's earnings. And just has the share price just got detached from reality in recent months? You know, it's been a fantastic trend, but is it all getting overhyped and too much of a bubble? Let's look at the big levels to watch. I think the most immediate barrier, the obvious one, is $969 a share. At the time of recording, that was the all-time high for Tesla, hit on the 4th of February. After that, $1,000 is an obvious one, and then we're really picking numbers out of the air, $1,500 a share if it does manage to break $1,000. Although it is having, you know, some problems in recent days in the last couple of weeks. On the downside is where it gets a bit more interesting. So the first major support is around 673. That's the low from the 3rd of Feb. On the 4th of Feb, it hits 969. So it shows you the sort of volatility that we've been through in February. After that, I think we're looking at levels that are, in dollar terms, are a long way away, but not so far away, considering how recently we've seen them, from 490 down to about 540. But let's jump back onto the chart and put some color on these numbers. So just to remind ourselves, this was really the big barrier for Tesla from when? June 2017 all the way through to December 2019. So almost 2.5 years. It could not get through sort of $390, $400 a share. Then it all changed. So middle of December 2019 breaks out and away we go. So let's pick up on this bit of the trend here. I think this is clearly the most relevant part on the Tesla chart. So I've swapped this over to an hourly chart now. So each of these candles represents an hour's worth of trade. And you can see that trend did a pretty good job until it accelerated again in late Jan. So at the moment, looking at Tesla, you'd have to say there's definitely scope for a pullback here. Even if the share price drops back to $600 a share, which were the highs third week of Jan, the breakout point again after the earnings, that trend is still pretty valid. So it does look quite overheated, to say the least, compared to where that trend line's been since the shares broke out. But I think if we were going to be ambitious and project it up from here, I think $1,000, let's round it up, $1,000 is the obvious next hurdle. We've got a range of about, $300 from sort of 700 up to 969. So perhaps 1250, 1300 would be a target if $1,000 broke. And I think that's probably the level to watch, big psychological level. But on the downside, any weakness for now still looks like a buying opportunity. For me, the better entry will be back in the low 600s if we do pull back to there. We've got support as well back ahead of 680 coming in from early Feb. So again, weakness back to here looks to be a buying opportunity. Let's bring in some indicators. So it's another great lesson why things like RSIs can give you an extreme reading when markets really start moving. The RSI in Tesla went overbought middle of December, and of course the shares just carried on. It's hardly come out overbought until recently, until the beginning of Feb, when it came off those 969 highs. Pushed higher, didn't take out the old highs, and we've got a lower high on the RSI. So we don't have bearish divergence, but we do have a market that is starting to flag. And clearly, I think the better opportunity here would be, again, a drop back to perhaps that 680, 700 area. So for me at the moment, this trend is still up. I think if it breaks $1,000 on the upside, there could be an element of sort of people jumping on again, fear of missing out, all of that. But I think the better opportunity is if we get a slide back to that trend line. And for me, it's only if we start to lose this whole $500 to $600 area does it start to look as if that trend is running out of steam. The 20-day moving average here is doing a great job. That's coming in at 770, 780. But I don't think a correction at the moment would do any harm to that trend. And weakness back to that zone would look like a buying opportunity. So it remains an interesting share to watch. We will come back to it ahead of the next earnings and see how things are doing. But from me, David Jones, we'll leave things there. Good luck with your investing and trading.